Hi, and welcome to this episode of On the Money. This tax time, the ATO is preparing to closely examine taxpayers whose clothing claims and deductions don't add up. Clothing claims are up nearly 20% over the past 5 years, and the ATO believes many taxpayers are ineligible for the deductions they're claiming. Last year, around a quarter of all clothing and laundry claims were $150, the maximum amount taxpayers can claim without providing detailed records. Remember, the only clothes that you can claim for are occupation-specific, protective, and uniforms. Regular business attire such as suits and dresses are not eligible for tax deductions, and neither is the laundering of them. The ATO wishes to remind taxpayers to keep the receipts for the cleaning of their work clothes if they wish to make a claim over $150. Have you noticed your online shopping has recently become a little bit more expensive? That's because as of the 1st of July 2018, the Australian government has slapped a 10% GST on all overseas online purchases under $1,000. In 2017 alone, Australians spent $21 billion online. That's an 18% spike on the previous year and makes up 6.75% of Australia's $300 billion retail sector. Will this tax put a dampener on Australia's online shopping addiction, or will the online shopping industry continue its meteoric boom? On the 1st of July 2018, the HEX threshold fell to $52,000 and is set to be slashed even more in coming financial years. With these new changes, anyone with a taxable income of $51,956 or more will have to start repaying their student debt. Importantly, it's not just graduates who'll be affected, as students who are still studying yet meet the minimum threshold are now also included. Under the new rules, those in the lowest HEX repayment bracket must pay 2% of their total income, which will rise to a maximum of 10% of total income for graduates with a taxable income of $131,989 or more. These changes will generate more than $345.7 million in savings for the government until the 2020-2021 financial year. This year's budget heralded in some great news for Australia's lowest earners. On the 1st of July, the national minimum wage rose by 3.5% to $18.93 per hour. This brings the weekly minimum wage to $719.20. Penalty rate earners did not fare as well in this budget, with Sunday and public holiday rates for those working in fast food, retail, hospitality and pharmacies falling from 25% to 15%. If you'd like more information about changes to workplace pay rates and how this year's budget will affect small businesses, please have a chat with our expert team. Do you own a small business? Are you searching for a government grant? Don't get caught out by convincing scams. Remember, government grant information is always free. You never have to pay for it. When seeking government grants, be wary of any website that charges a fee for special access or consideration. Government grants are awarded on merit and do not come with a price tag. Some scam websites may try to imitate government websites, so check that it's officially affiliated with the government by looking for the .gov.au extension in their URL. If you believe that you've uncovered a scam, be sure to report it to the ACCC. From the 1st of July 2018, purchasers of newly constructed residential properties and residential land subdivisions will withhold the GST component from the sales price and remit the GST directly to the ATO as part of the settlement process, under new rules given effect through the Treasury Laws Amendment Act 2018. These changes also impose obligations on vendors to notify purchasers of certain GST information to allow them to comply with withholding obligations. These new rules are being implemented to reduce Phoenix activity, which lost the Australian government $1.8 billion as of November 2017. On the 18th of May 2017, the Treasury Laws Amendment Enterprise Tax Plan Bill 2016 was passed, reducing the company tax rate to 27.5% for companies that are considered to be base rate entities. There are still 2 other company tax amendments pending before the Senate. If passed, one bill seeks to extend the lower 27.5% tax rate to all corporate tax entities by 2023, working towards a 25% tax rate by 2026. And the other will change the definition of base rate entities to exclude corporate entities that have a passive income of more than 80%. Until these bills pass, the tax rate remains at 30% for companies that are not base rate entities. That wraps up this episode of On the Money. If you'd like further information about these or other accounting issues, we welcome your call or email. See you next time.